let's get to this week's stocks to watch, starting with Cisco. Now, the stock did gap down after its earnings report last week. Investors really honing in on that guidance, but what do you make of where the stock is now and where it could be headed from more of a long-term perspective?
Yeah, so we're always focused on a long-term perspective. Last week was real rough on the stock. They actually beat the expectations for earnings. They beat the expectations for revenues. The market is super focused right now on revenue growth, and the company reported year-over-year revenue growth of 6%, which is much better than average. And so you would think, hey, what would make the stock go down as much as it did last week? And it was comments by the CEO, Robbins, as to the future. And we're not as concerned about that as Wall Street is, because if you look at Cisco's history, formerly run by the CEO John Chambers, for many years, he was famous for talking down expectations, lowering the bar so that then they could exceed those expectations. So when we think that perhaps Robbins is doing the same thing here, when he made his forecast for the rest of the year in terms of sales growth and earnings growth, he put 0 in for sales to Huawei. And already this weekend, President Trump said they're going to give a 90-day extension to companies doing business with Huawei. So this morning Cisco is outperforming. It's up 1.5% compared to the market's 1%. So already we're seeing the fact that Robbins was probably a little too pessimistic in his comments about the future.
Right, maybe a bit of a conservative guide there.
Right.
And then in terms of the stock, it is well off highs. For those growth investors looking for a little bit of momentum, it would be nice to see it firm up here, maybe get above its moving averages. But in terms of your outlook for the stock and the dividend that it provides, potentially a good name for a longer term position?
Well, we just love high dividend stocks, and we love them even more if they increase their dividends. So Cisco in the last 4 years, just 4 years, they've increased their dividend by 67%. That's pretty darn good. So dividend increases come from free cash flow. So their free cash flow yield is above 6% right now, so it's more than double the dividend yield of 3.1%. So there's plenty of room for them to keep increasing their dividend, and we found that the surest way for a stock to go up would be for dividend increases over time.